Welcome guys to my channel. So this is our first video of this channel and I am your host Sharma, and this is our first video on the Ind AS 109, which is a financial instrument. So this standard is very huge. It's almost 200 pages, and whenever you open that standards, it's like, oh my god, what the hell is this? 200 page. How am I gonna read all those standards? So therefore in this video we will discuss like the overview of the Ind AS 109. We will not deep dive into it because it will take a lot of time to fully understand this standard. So we will overall cover the Ind AS so that you can get the idea like what is written exactly in the Ind AS 109. And also, while I will educate you about this standard or another standard, then I will also give you the para reference of that relevant standard, so that you can also prove to the other person like this is mentioned in this standard. So suppose like in this standard I will going to tell you like you have to now calculate the present value of the loan and put that figure into your balance sheet. So whenever someone will ask like why the loan is in the present value, then you will just say like those person on the internet is saying to calculate the present value of the loan, and that person will say where it is written, and you will just say, oh my god, where it is written, I don't know about it. That person is talking about this thing into the YouTube, I don't know where it is written, and that person will say shut the fuck up. So therefore I am going to tell you the para reference on my video so that you can also prove, and so that you can also check it out in the standard like where it is written that you have to calculate this much amount, that by using that method, so that that method can be easily cross-checked by the reference of the Ind AS. So now, alright, so we should start our topic. So now first topic is like we will discuss here the overview. Overview is very important so that you can get the bird eye view of the whole standard. So this standard is basically divided into the 6 different chapters, and all the chapter is very different, which is different from one another. So therefore to read this standard you have to now break down the standard into the 6 segments, so that it will also mentally means you will just stay positive to read the standard, because when you will break it down into the 6 segments, if you read it like continuously, I'm betting you and I'm telling you that you will get nap and your motivation or your hope will die. I'm telling you that. So therefore it is very important that you bifurcate those standards into the different segments, so that you can also try to at least read it out. So now first segment or first chapter is about the objective, and it's very clear like what would be the objective of this standard. The objective of this standard is to calculate or to present the financial instrument into the balance sheet or profit and loss account or the other comprehensive income, so that the user of financial statement can get the idea like where and how it is presented. Basically the objective is just to get you the accounting principle of the financial instrument and how it will be reflected into the financial statement. Second one, what is the scope of this standard? So in the scope segment you will find like which kind of a thing will be included, or what kind of financial instrument is in this standard and what are get out of this standard. So basically, as the name suggests, this is the Ind AS or standard on the financial instrument. So now you should know like what the hell is financial instrument. So if you will check like the definition of financial instrument, and the definition is not given into Ind AS 109. The definition of financial instrument is given under Ind AS 32, which is the presentation of the financial instrument. So when you will check out the Ind AS 32, you will get the definition of the financial instrument. The definition of financial instrument is like that: financial instrument is any contract that give rise to a financial asset of one entity and financial liability or equity instrument of another entity. So those kind of a contract where it give rise to you financial asset, and to other entity the financial liability or the equity, it will be a financial instrument. So basically you don't get the idea like what the hell is financial instrument, because that definition is like a weird definition. So if you will check out the definition, so for understanding the definition, you should first know what is a financial asset and the financial liability. And when you will read out the definition of financial asset and financial liability, then also it will confuse you. Like the definition is quite long, but if you will break it down, then you will get the idea. Like the financial asset is any asset that is a contractual right to receive cash flow from another entity. When you have a contract and it gives rise to you to receive the cash flow, then that is the financial asset to you guys. And financial liability is a contractual obligation which financial liability is a contractual obligation to deliver cash or another financial asset to another entity. So when you are under the obligation to deliver cash or to deliver another financial asset to another company, then it will be a financial liability for you. So basically you are now confused because the language of this definition is quite confusing. So let me just tell you by way of example, like what is the financial asset and financial liability. The financial asset would be like cash, trade receivable, loan receivable, when you give the loan to someone and you are in a position to receive the contractual cash flow from that person. So loan receivable is also financial asset. Investment in share or bond. So remember that investment is also covered in this standard. Earlier it was under the accounting standard 13, but now accounting standard 13 or relative Ind AS is not mentioned. So therefore accounting for investment would be covered in this standard. Accounting for investment in share or bond, not accounting for investment in properties. Like if you invest in the property of someone, like fixed immovable property, those will be covered into the separate Ind AS, but the investment in share or bond will be covered with this standard. So that is also your financial asset. And what is not your financial asset, like the physical asset, like the inventory or the fixed assets, intangible assets, leased assets, income tax refund, prepaid expenses is not your financial asset. So when you will check like trade receivable, so if you check out this with the definition of financial asset, because trade receivable is giving you the right to receive the contractual cash flow from another entity, therefore it is a financial asset. If you will check out the financial liability, the example would be like trade payable, loan, when you receive the loan from someone and you are now in a contractual obligation to pay cash to another entity. Debentures, derivatives, derivative is also financial instrument. Redeemable preference share. And what is not the financial liability, like the income tax payable, VAT payable, advances from customer, provision for warranty is not your financial liability. So now I think it's now clear to you like what is financial asset and what is financial liability. So the scope is like this, and in the scope also there are a lot of exclusion which is not covered in this standard, like investment in subsidiary, associate and joint venture. So the accounting of those is not covered in this standard because that has a separate standard for dealing with that. And then the right and obligation under leased assets, so because there is also another standard which deal with this, so that is not covered in this standard. Then the employer's right and obligation under employee benefit. So basically that is a financial asset or liability, but the standard is itself saying that it is not covered in this standard because there is a separate standard for this. Then right and obligation under insurance contract, because that is also covered under separate Ind AS. Then share based payment, another separate standard. Provision, contingent liability and contingent asset is also not covered with this standard. And there's also a lot of exclusion from this standard. So if you want to check it out, then read out the chapter number 2 relating to scope. If you have any doubt on any point, then comment on the comment section. I will reply it by way of a separate video. Now third chapter is regarding the recognition and derecognition.